Hey guys, this is Eric with Inspired Trading. I hope you guys had a great week. I had a successful week this week, so it turned out well. Last couple of videos went over the head and shoulders pattern, which is a bearish pattern. Now we're going over the inverse head and shoulders pattern, which is a bullish pattern. All right, so let's get straight to it. We're going to be on Apple today. On Apple, on this, I see three inverse head and shoulders that are formed on the chart. Okay, out of the three, at least two were successful, one failed. Remember, in trading, nothing will be 100%. You will always face the possibility of taking a loss. Okay, and you're not going to win every trade. All right. Kobe Bryant had some great games where he scored over 80 points, but that's not the average every night that he plays. Okay, so you need to think like that when it comes to trading. You're gonna have some successful weeks where you didn't lose anything, you were just superb. Then you may have a string of bad losses, or you may have some ups and downs, a yo-yo effect. But the most important thing is, if you want to be considered legendary in your own right, if you want to be, an all-star, just be consistent, stick with your rules, and over time, all those smaller wins with a couple big wins, mid-sized wins, keep those losses very, very small. You're going to be very, very profitable over time. All right, so let's get straight to it. All right, I want you guys to look at the chart while I was rambling on. Maybe you already caught it. Okay, so I'm going to go back to the one that's obvious right now, and it's this. All right. Normally, when you have a inverse head and shoulders or head and shoulders, you're gonna really what's gonna stick out the most is the head. All right. So let's go ahead and identify this head and put it on here. And then after you identify the head, the most obvious other piece of the head and shoulders, or the inverse head and shoulders, so this is an inverse, is that you immediately look left and you can see whether or not you have formed a left shoulder. Why do we immediately look left? Okay, is because that is the most recent area of a clue that was left. Normally, if you was looking at this in somewhat of real time, you can see this move come down and then you'll see price start to move back up. You can immediately say to yourself, hey, look, this looks like a potential of a head and shoulders that's being formed. All this over here doesn't exist if we're looking in real time. It doesn't exist yet. Only thing you will have is this and this. And then you can immediately say, hey, this possibly could be a head and this could be a shoulder. That's it. All right. So now we're waiting for price to what? Break this key area. Okay, I already have a resistance line right here. All right. Price had a hard time breaking it. It pierced a little bit, but it came back and rejected, and then we got a what? A right shoulder. So let's go ahead. Let's label this as the right shoulder. All right, right shoulder is created. All right, boom. What is the rule? You measure from what? The head all the way down to the neck. Remember, this line of resistance is the neck, shoulder, shoulder, neck, head. All right. Measure from the head here. You take a trend line. I already have my stuff on my home favorites. Right here is for you, for a trend line. Remember, we're on Trading View. All right, go down all the way up to what? Neck. All right. Take it, put it on top of the neck. All right. Take a green bar, box, rectangle, drag it. All right, get rid of this. Okay, so that's our target to the upside, right? By measuring this. Okay, let's say price is back down here. The right shoulder has clearly been formed. All right, price starting to move up. What are we looking for? We're looking for what? To break what? this line, the neckline. All right. We what? Get a break of the neckline. We push up, and then we get a what? A retest. Put this in so you can see. It didn't go all the way. Came close though. All right. We got a break, and then we get a what? Retest of this trend line, and it come all the way, but it came back in this area. All right. It's two things. This one thing was one thing you can do. All right. After you've entered in, you're up. You can take profit if you want to. I don't know if that's even worth it. Okay, you're at 57. I guess you taking an options contract, you up pretty good. So I guess you could take profit if you wanted to. All right, but you get a what? A retest, a pullback. On this pullback, you can add more positions if you want. Okay, this is more confirmation. So now I'm getting to it. It's two ways you can trade this. You either can trade the breakout or you can wait for what? A retest. So it depends on your level of patience. Some people are impatient; they just want to go ahead and take the chance on the breakout, and then they may add positions on the pullback, or they may have a specific target price that's the short term. Okay, so it's different ways you can trade it. Right, the safest route is waiting for a pullback. There's the risk with the waiting on the pullback. Price can break out and decide once it breaks out here, it can just shoot on up and you'd never get the pullback. And then you'll sit here and you'll regret that you waited because you missed it. But that's why you should stick to a rule. Stick to your rules. If it don't retest, if that's your strategy to wait for the retest, and if it doesn't happen, so what? Move on. Find another trade. Live to see another day. Don't chase it. All right. I'm gonna show you something else before we leave today. That even if it did do that, there is another opportunity, and I'm gonna show you where that opportunity comes at, and it's gonna make things easier for you to understand, and you'll see that other opportunities do come. All right. So let's look up here. What do we have? Price hit in our target zone. Okay. So remember, you entered right here. Okay. You got in when it broke out at around $257 or so, and you got out at as soon as it hit the green box around 297. That's a great trade. All right. It's a 15% gain if you was buying outright. All right. You all know in the options world that is astronomical. That's not 15%. All right. Somebody holding this trade possibly could have 10x their money from where this is at. Depends on what the strike price was. Okay. So you clearly see that we did what? We measured the head down to the neckline and we put it on top of the neckline and we what? Got our targets. Boom. Okay. There's another way you can do it. You can use your fib extension. Remember, you go over here to your left, right here. You'll go to the trend-based fib extension. Click on it. Take it from the bottom. Take it up to the top of that neckline. Drag it down. All right. Now this gives you this target. All right. So you would have put a box here, and that possibly could be your first target, and then this is your secondary target. So there's two ways of doing it. All right. Some people feel better with going with the fibs and using this. Some will just want to go off the pure measurement and going to the top. All right. Either way, it's fine. As long as you're making money, you're fine. All right. Most people would say, well, why would I go with that first one? I mean, the second one you just drew up. Why would I go with that? Well, it seems like we can make more money up here. Um, it's all a preference. Some people don't have the patience to wait for this move. Some people want to maybe get in right here, and they may take a bigger, um, position size. All right. So let's go over. Let's go over here, and let's look what's going on. And what do you see? You see another head and shoulders. Inverse. Let me get that right. Inverse. All right. Let's label it. Once you get good, you'll start seeing it faster. Boom. Head. All right. Well, we got shadow left. Okay. Boom. Left. Right here. Boom. Right. Right shoulder. We got what? Neckline. Boom. Neckline. All right. We did break out of it and we came back down below it. And then we eventually broke out. Let's measure. And guys, everything's not going to be perfect. So some of the patterns not going to be perfect. One shoulder may be a little higher than the other left. I mean, if you measure a human, everything's not going to be perfect. Shoot, you never know. One leg is shorter than the other. Who knows? But take it from there. Put it on top. And what do you know? Look at price. Sorry, we already had this green box. We can move it down. So if you move it and you add yours, just showing you if the other one didn't even exist. Try your green box. All the way across. Why you want to do it all the way across? Because price come up here, consolidate, just lollygag around, and then it can boom, then it can hit it. All right, so you do sometimes you drag it all the way across so you got room for it to hit. All right, but you see it, you see it. Now I bet somebody on here will look at this and then have something negative to say. You know, like you see it, like that's why you can't argue with math. Like I mean, 2 plus 2 is 4, right? We ain't doing all that. People want to, where it could be considered 22. We ain't doing all that. Math. 2 plus 2. 4. All right. If you want to get into all that technicality of, well, if you see 2 2s, it could be 22. No, keep it simple. 2 plus 2 is 4. All right. Measure the head to the neck. Set the upside targets. That's it. Keep it simple. I just showed you twice. Targets were hit. It's all for the same move. So you had an inverse head and shoulders, and then it created another inverse head and shoulders. All right. So now let's go over here and let's look at a failed one. All right. Head. Left. Sorry, left right here. Right. neck. Price came down, came in, broke it. Remember what I told y'all? You always gotta have what? Risk management. Okay. All right. So this is where a retest person would have saved themselves. All right. So if you would have just bought straight on this breakout, you was up a little bit and then it broke back down and your stop loss would have got hit. So you were lost on this trade. All right. But when price would have came back down in this area, you would have found opportunity to go to make up for this loss. Okay. So you got knocked out your trade. Stop loss. All right. You good. The person who waited for the retest, it came back down and it failed. They never took the trade because the retest wasn't successful, so they just never got in. All right, so it's risk and there's rules to this. All right, everything is not going to always work. All right, so you clearly see we had a head and shoulders pattern. I mean, an inverse head and shoulders. It didn't push higher. All right, it failed, came back down. But if we really want to look at this, now let's zoom it out. Go a little bigger. Let's go a little bigger. Let's go a little. Let's go a little bigger. Let's see if we can really like when you start training your eyes, you start seeing some of the things bigger. And right now, you're probably like, this still is too much. I don't get all these lines and what's going on, but you will clearly see. I'll show you something. We still can consider this as what? A left shoulder. We consider this as a right shoulder. All right. And you possibly could still go from the head to this neckline, and you can move this up. All right. And then we have what? A target up here. Everybody say Apple's not going to go that high. I don't know. It may. Why not? Stay in this area. Stretch your arm down over. Okay. Look at that. Head, left, right shoulder. You was like, well, Eric, what about this right shoulder? No. Look at the zoom out. Zoom out a little bit more. You can see this pattern. Okay. There's something else being formed here, which we have to go over in another video. But when you understand patterns, you pick it up. So this is a cup. And what is this? A handle. It's the handle. All right. How do you get the targets on the cup and handle trade? Same way you do with the head and inverse head and shoulders. Measure from what? The bottom of the cup to the top, the brim of the cup. You put it on here. Put it on top. Boom. Same thing. So we just saw two patterns in the one. We have Apple has the opportunity to be strong, bullish, to break up here. Now, you still got to respect this line. Why? because look left. Remember, we talking about support and resistance. You look left. This is a major area. Look at all this area. It had a hard time breaking, and it broke all the way down. We could come back up here and visit this, and it could consolidate. Okay, or it could come back and test this area. But eventually, it wants to come up here and test this area. Okay? So this is the beauty of understanding patterns. So we just went over the inverse head and shoulders. And while I was talking, I zoomed out. I said, oh, wait a minute. This is a cup. And this is a handle. You're like, how did he get that so fast? When you start understanding this, you just get it. Think of a quarterback. You see a coverage out, he can immediately know, oh, okay, they got two high safeties, they got two corners. Depends on their alignment. He may look and say, look like they're in the cover too. All right. For those who are not in football, don't worry about that. But I'm just giving you an example of being able to recognize. All right. You go outside, you look at the sky, you see a dark cloud. What's the first thing come to your mind? Oh, there must be a storm coming. You didn't have to look at the news to look say that look like a storm is coming. And you prepare yourself. You're either gonna take shelter, you're either gonna delay some plans, and you're gonna say, let's see how this thing goes by, because look like something is coming. I mean, it's the same thing when you open up a chart and you see it, you say, ooh, this look like something's shaping up to be something crazy. Like, let's look over here. Like, look at this. Even as I'll zoom out, what do you see? You see a head, left shoulder, right shoulder. Now it came back up here, and this head and shoulders will be in play as long as you do not break this area. All right. And when it breaks this neckline, which it did, it broke it and it went to the downside. And I'm rolling the bet if you just measure from what here to here, bring it down, boom, bam, targets, what did it do? Smash through targets. We're just on one stop. We don't have to go through anything else. And we see clearly over and over and over and over again what's happening. Okay? You trade the breakouts. You trade the retests. You use risk management. You set your defined stop losses. Okay? You say, Eric, if you're trading this, where's your entry? Where's your stop loss? If I'm breaking above here, my stop loss is going to be below that right shoulder. If I'm waiting for a breakout and I take a trade, immediately I put it right here, my stop loss. Okay? Now we're up. We're good. Now you can do what? Move your stop loss into what? Profit. Okay? Maybe on this pullback you would have hit it in profit, but you made money. All right? Or you could what? Adjust your stop loss to what? Break even. Okay? So now you up real good. Now you move your break even into profit. And if it pulls back to the area of profit, you get hit in profit, or you can keep riding it. All right? So that's how you know where to set your stop losses. You look for the next area of major support or major resistance, depending on if you're taking a short, look for the resistance. If you're taking a long buying, look for support. Below support, above above resistance. That's where your stop losses are going to go. All right. So I hope that video really helped you guys. Like I said, we just traded. We're looking at Apple. We were able to identify a cup and handle. We identified multiple inverse head and shoulders, and we saw at the end a head and shoulders pattern. So guys, just keep it simple. Like, trust me. Like, all this sophistication, not. I mean, this looks like a lot for if you're not an intermediate or advanced trader. It can look like a lot. And if you fail on this video without having a foundation, don't worry. We'll start doing some more foundational videos to help you. But like I said, this is more for intermediate and advanced to identify this stuff and trade it. All right. So you guys have a nice weekend. Read, get out, walk, exercise, drink your water. All right. So y'all have a great one.